Fintech and financial inclusion in the country. And we'll be joined now by a KCB Director of Digital Financial Services, Angela Mwirigi, to discuss this. So over this period, especially over this period of COVID-19, we've seen the push for people to start thinking just beyond the brick and mortar way of doing things. We talk about people taking their businesses online. We also talk about the way technology has helped very many service providers to reach out to their customers and their customer base. Also, when it comes to the financial services sector, it's the same. Technology has really pushed them and opened up new opportunities and new avenues for them to reach out to their customer base, where you have financial technology services. You can apply for a loan without necessarily getting to meet somebody face to face. You can get your money wired to you without having to interact at all with a human being face to face. Well, you could interact with them by bots and chatting and them calling you or calling them, but you're able to actually access an entire array of financial services beginning to the end without necessarily having to meet with that person face to face. This kind of advantages that we see with technology and looking at our financial services sector, do you feel that our financial services sector has actually taken this on completely and utilized it to the fullest? Or are there still some areas where you feel like especially banks would do better?
Banks can always do better.
I didn't expect a different answer from UCT.
Well, it is a different answer. I'm not frothing at the mouth,
As usually would be.
And neither is smoke coming from my nostrils.
Not today.
There's a change.
Yes, a significant change. I am saying that if you look at just the business of banking, it is not possible if there are no human beings to interact with. Now, my understanding and my experience is that very many bank decisions do not encourage that interaction. So one doesn't endear one to the services that they offer, and they don't provide an atmosphere in which conflict resolution, like debts which haven't been paid, can be resolved. So you find a situation where the moment someone is unable to pay, a discussion of this is what I'm able to pay doesn't happen, because the relationship is such that the person prefers to take off. And so the default rate increases. Now, banks came up with a solution sometimes back because of COVID to try and mitigate, find ways of getting their customers to find, should we say, a softer landing ground for paying. It was not enough. It's not enough. Not enough in this sense. The banks have rules by which they function, and they try to abide by these things. I'm saying, put on a different hat, rethink this whole banking thing again, and rethink it in our context. Seriously rethink it, and rethink the conversation you must have with your clients, so that your clients really are your clients, not people who are only good so long as they are repaying what they owe you. And when it comes to a situation where they are unable to, suddenly there are these draconian rules that you levy upon them, and you more or less treat them like criminals.
You've said it. Let's bring in Angela. Angela Mwirigi is the Director of Digital Financial Services at KCB. Good morning, Angela.
Good morning, Eric, UCT.
Good morning, Angela.
Good to speak to you this morning, Angela, and welcome to the Situation Room.
Yes, thank you.
So we'll discuss how Fintech has increased financial inclusion in Kenya. And let's first of all start with definitions. What is Fintech?
Yes. So Fintech is giving the choice to enable access to useful financial products, such as credit to communities, like Citi has just mentioned, that's individuals or businesses. So you can find that there are communities who are disenfranchised for one reason or the other, either the level of income they are making, the geographic location. There is all sorts of reasons why people end up disenfranchised, sometimes from mainstream financial services. So then financial inclusion is finding ways around that so that you can add as many people as possible into the ecosystem. Because the more people you add into the ecosystem, no one can actually change their lives without credit. No one can grow or improve their lifestyle or actually, in fact, grow their businesses without a means of accessing credit or financial services like insurance, savings. There's a whole host of services you need in order for you to be able to improve the nature of the life you live. So financial inclusion is driving that access. It's what we call the 5 A's, making it accessible, meaning it's easy for you to reach it, like if you use the phone or something. It is available, that's self-explanatory. It is affordable. If it is not affordable, then those disenfranchised communities might not be able to join. And then, of course, you have to make it adequate, because it is not enough to give me a credit limit if that credit limit cannot make any kind of difference to my life. You must be aware that it is available. So those are the 5 A's we sort of look at when we say, how do we improve the financial inclusion in our society?
Angela, you gave 4. Accessible, available, affordable, adequate.
And aware.
Oh, aware. That's an A.
Yeah, you must be aware. You cannot use something if you don't know it is there.
All right.
Sure. Angela, you talk about financial inclusion, and are banks responsible solely for this financial inclusion? Because I see very many platforms that were then created, whether you want to look at mobile telephony, whether you want to look at increased access to communication, whether you want to look at the technology that then made it available then for people to communicate from different parts of the country, for example. It would appear to me that then banks saw an opportunity because of the different platforms that were then innovated and created to then come in to do this. So are we seeing banks then improving on financial inclusion, or now bringing it as a sector within which they can play?
Okay, so for you to consider about how these things work is that everything is an ecosystem. Everything works and grows and innovates from a beginning. So the banks in of themselves might not have been able to come up with it initially, or might have started it. If you think about it, what banks have existed for around about the time of the monks in wandering around Rome and giving wax stamps for you to be able to go and cash them out at a different location. So banking as a service has existed in many formats, and maybe not in banks as commercial banks as we think about them today. But the point is that what matters is then how do you innovate so you can improve the reach of those services to people. So mobile telephony has helped us because it is a mass communication tool to expand the reach of financial services. We leverage it because it creates the rails to enable us reach more people, more customers, more users. Now, there's a lot of fintech because this is a partnership of many parts, because even the government is a very major player, if you think about it, because if you don't have government support, rules that support innovation, rules that enable people to be able to access easily, then you will not be able to make much progress. So in my view, you have to look at this not just as a purview of one particular industry, but that's something that we all work towards. Because even small business owners, the people who build the small fintechs, those are people who drive even better access because they can build capabilities that perhaps an organization like a bank cannot build. If you think about people like Copper, Solar, or the people who do education or medicine, there's lots of areas where it is actually people who take those platforms and then think about how do we expand the reach of these platforms, or how do we innovate for solutions that can make a difference in people's lives.
Okay. So now when we talk about inclusion in all of this, obviously there were some people at some point who would not be able to access services. And then fintech has graciously brought this about. So how do you see that when previously just the banking services, somebody walks into the bank and now has to have person-to-person contact in order to access. Now with fintech, that doesn't necessarily need to happen. Do you find that, it's kind of like what CT was saying earlier, do you find that now the way in which you process, or the way in which you then deal with your customers then would change because of the fact that they actually don't really need to come in and see you to access your services?
Yeah, okay. You have to think of it, and I understand what CT was saying, but you have to think about it. When it's a human interaction, you will never get enough scale. Yeah, you won't be able to reach as many people as you can. The intention for us is not so much that we think that banking will necessarily scale down the brick and mortar type branches that you know, but it's that the conversations in those brick and mortar branches will change. So our wish would be that we get people to move transactions, things like cash in, cash out. Let's just go cashless. That's the happy space for all of us. It's expensive to print and make, doesn't help our government to keep having to print and make it. It's also dangerous in this environment. I listened to your conversation earlier, and we need to figure out solutions to make it, to stop the spread of this pandemic. So cashless is one of those ways that or cash light may not be possible to entirely eliminate small payments, but as much as we can, we should do that. But the point I was going to make was that if we can then use the branches for deeper conversations, financial advisory services, you can come in and have a conversation about how to take your business to the next level, how your financial advisor can help you think about how you approach your bookkeeping. Because we always say that some of the challenges that face our SMEs, and yet they make up almost 40% of our GDP, is that we need to figure out how do we help them improve how they function. So we need to think about how to extend the services that we have into just turning our bankers from being people who count paper money to people who actually have conversations with their customers. And fair enough, sometimes difficulties will happen and people will default. That's why the bank has actually restructured 115 billion shillings worth of loans. We have given moratoriums to small SMEs, and extended the dates and repayment periods. So I always find, and I think I really should address what the question that Citi raised, is that we must understand it's not that the bank wants to be draconian. It's that it has a responsibility to its shareholders, and so it must figure out how do we balance what our customers need, how do we balance what our society needs, how do we ensure this organization that enables you to leverage an income at this level and for you to grow it to this level based only on the sole trust that you will be able to build your business or that your income will remain stable and you'll be able to grow. That's what leverage is. And the only things that do that are actually banks.
You know, I like the way you've explained it. You see, the disconnect arguably could actually be historical in that there's a history in the manner in which what you are calling brick and mortar banks have handled their affairs. And you are right also when you say that when you look at fintech as we understand it as lay people, that there is an ease with which one is able to access credit through these systems. That having been said, you see, there's the responsibility of paying back this money once you've got it. If one doesn't understand or enough time isn't taken to educate, because it seems to be the assumption that when you borrow, you will pay. Yes, some people will pay, but not everyone understands or has inculcated that culture of discipline of paying. But further to that, and I'm bringing it again to the conversation, because even with fintech, you'll be given a number to call, and so that conversation will take place. You may not see the person, but it will take place. The conversation that is necessary so that people actually understand, first of all, how banks function, how they make their decisions, and what it is they do and why they make the decisions they do. It may seem like it's mundane, but it's absolutely necessary, because there is, in my mind, a clear and great disconnect between what the mwananchi who is looking for money in the bank thinks about the bank and what the bank understands their role is. In my mind, there is usually a disconnect.
Well, true. And that is why there have been a lot of mechanisms that have been tried around the world in different ways to get people to understand what their obligation is. We try to teach people. We do a lot of campaigns to tell people we are trying to improve the nature of the product. You understand, even for us, there is a bit of a learning curve in how to do what we call the mobile lending, the one that enables, the digital lending that enables people to actually borrow on something as simple as your ID. And that's pretty much all the bank is sitting with, the ID number of this person. That's all we got from the government system and maybe from our telco partner. And that's what we are using to gauge whether or not we have effective KYC or know your customer information on this person. And then we give them a credit limit, then they default. And in some cases, when we thought about this, because we have tried quite a number of models now because we've been doing it since 2015. We've been trying quite a number of models. Is it okay to give really low values? Are they recoverable? If you can enable somebody to pay their fare to town or buy the hawker to buy the goods that he's going to go and sell and repay you by the end of the day so that tomorrow he can then buy even more, is this a model that works? Now, the problem, like you say, is that every customer might not, or every Kenyan might not understand. If you don't repay, then you lose the opportunity to ever change your life. Because then we have to say that this person doesn't have the discipline to repay, therefore we set them aside. And we don't lend them anymore. And that is unfortunate as a decision because sometimes bad things will happen. You know, I don't want to use the common parlance, but things will go wrong. Yep. So you don't want someone to suffer indefinitely. But actually the rule as it stands, and this is what you're saying about the differences in rules from what banks do or even the credit institutions we work with, like credit reference bureaus, will give it a 7-year wide berth of that person. And it might have been something that was a 3-month issue. And maybe that person should be given another chance to come back. So what we say then is we try to educate customers, come into the bank, give us more KYC, give us more information about yourself than what we have. Sometimes, I agree with you, where we started from perhaps banks of old had the whole pristine, very white place that was rather intimidating to your farmer with his boots and red soil. And maybe that is why banks like Equity had a bit of purchase when they came in because they felt more welcoming. Mm-hmm. But I think at the end of the day, things have really evolved. And the onus is also on the customer to think about what is my obligation. I cannot just take this money and then refuse to pay.
As I hear you speak, then I hear you say that it's very important to have some level of person-to-person interaction between bank and customer. And at the same time, now looking at the advancement of fintech, where you're reducing the person-to-person interaction, where do we strike the balance? I'm dealing with a bank. I open my account, digitally, and then I've been doing all my transactions digitally. I have not met with any person. I go to this platform that allows me to borrow some money. I borrow some money, and then something happened, like you said. I fell ill, and I was supposed to be repaying, and now I'm not able to repay, and that's it. I have not had any person-to-person interaction with my bank, and the same, because I assume it's a machine. The machine then is also now just forwarding my name to the CRBs and saying now I'm no longer creditworthy. Yet I have been paying, and I've been a very loyal customer to this bank for a long time. How do we strike this balance?
So we have considered how to resolve that issue, and this is why I said it is very important that people walk into the branch. You don't actually need to know the branch staff or have a personal relationship with any of them. The point is that if you walk into the branch, you improve the information they have on that customer. We do have actually internal lists, what we call the white list, where we actually ignore what we then put in the CRB. And if we have holding your account, we treat the people who we have stronger information about a lot better than the one we have a lot less information about. So perhaps the key is to inform people that walk into the branch, talk. It's Kenyans who work in the branches. It's not strangers. It's our neighbors, our family members, our community members. So we should actually, instead of, my concern is people who just go away and never come back, never try to explain. Actually, most people, when you ask them, if they go and talk to the bank, meaning the bank are sitting in the branch, they can find a solution for you.
Okay.
Broadcasting on Spice FM, KTN Home, online, Spice FM KE, YouTube, Facebook, and Twitter, and spicefm.co.ke. This and every weekday morning between 6 a.m. and 10 a.m., you have in the room CT Muga, Nduoko, and Eric Latif. Joining us this hour on the line via video link is Angela Mwirigi. She is the Director of Financial Services at KCB. We're talking about fintech and how it has helped with increasing financial inclusion in the country.
There's something that has been mentioned by our guest, and I like what she said. Go to the branch. Given my chronological reality, that going to the branch instead of fiddling with my phone resonates a lot better. But there's this little detail here. With banking as it is now, you will go to the branch. Let's say you're seeking assistance, but there is also need to ask someone at head office. The decision is made here, it's taken forward. Why I say chronology here, why I bring it into the discussion is there was a time when the decision was made at the manager's level. And why is this important? The manager knows you. The people who work there know you. These details that she has mentioned about being known by these people, they do know you. The people at the head office who then crank the numbers and do this don't know you. Whatever is known about you will be written. So that decision that is made is actually not made fully with the full knowledge of who you might be. Yes. What they have is data. And the data is part of you, not entirely you. How do you resolve this?
Angela.
Fair enough. It's true that, and this is why we say that the beauty of digital services is it provides scale. But yes, it is true that a lot of the decisions, especially when it's something substantive, where you're talking about substantive sums of money, then the decision will be made centrally. Because also the same way they know you is the same way you want to avoid creating conflicts of interest. So this is why we tend to make the decision sort of far removed in depending on the size of what we are talking about. In fact, you might find that someone who is actually discussing a lot of money has a lot more deeper relationships within the organization. But that said, the person we are depending on for the information about the customer is that same branch person. The assessment of risk comes from that branch person. So remember that this is not just a question of balancing the risk on whether or not this person has the repayment capability eventually to meet the obligation. So what we try to do is that balance might not always work perfectly, but we try as much as possible to make it as objective and subjective as possible. Subjective because the branch person makes a recommendation. We have a system that is going to look at the data. That is the objective piece. And then, of course, if it then needs to be reviewed by another human being, then it will go through the various processes. The beauty of an organization the size of ours is that there is nothing that is set in stone. There is a lot of people involved in the process, and there is a fair chance that if you feel that the decision that was made did not work for you, there is ways to request again for this decision to be reviewed. That's why we even have a customer experience center that sits at Upper Hill. And I think we've opened at least 2 more around the country, and our intention is to open quite a number of them. The purpose of a customer experience center is to resolve those rather odd issues that can sometimes create complexity for a particular customer, not because perhaps of their situation, but because of the complexity within our organization that is creating that. Because you see, an organization our size must run with rules and regulations that enable it to function in what seems to be a fair manner consistently. But that might not work for every single situation.
Okay.
So that is why we create customer experience centers where people can go and actually outline whatever the challenge is they're experiencing, and then we can go through a more rigorous process of understanding how do we resolve it. Then it is not as straightforward, this is what the system spat out, that is what we are going to do. So we do have a means of resolving. And I think you're right, perhaps what exists is that people might not be entirely aware of all the options that are available to them. But this is why interviews like this exist. Then I tell them, and a few more people know, and then they'll tell a few others.
Sure. Speaking of then non-traditional ways of doing things, and when it comes to banking, and fintech is one of those. So what then, with all that you've talked about and all that you have seen playing out in the financial space in this country, what then do you think as a financial institution, would you be able to benefit? And then what would people, Kenyans, be able to benefit as you then on piggyback on this fintech?
So you see, the beauty of an organization like ours, it has deep pockets. So what it has done is we bought a very amazing system. We call it the Vuma system. The Vuma system, we are putting out APIs for anyone to be able to integrate, and you can build. It will do for you collections, it will receive payments, it will enable you to take cards, mobile payments, everything, all types of payments. And the beauty of it is that then with those APIs, anyone can innovate, because what usually stops people from doing things is the capital intensity. So the ability to pay for a POS is $600 one. So this might not be practical for every small businessman, but you can do an e-commerce transaction instead. You can actually accept the payment from a card on your computer, on your phone. So we are trying to figure out ways to make things easier and better We may not be able to directly speak to every single developer out there who wants to be able to integrate to us, hence why we publish open APIs. You see what I mean? So we try to look for ways to improve things. And of course, we are talking with the government to see how do we make small payments digitized? How do we assure people of their data privacy so that they can trust that when they make these payments or collect these payments online as e-payments, they have no cause for concern? Because we know these are some of the issues that maybe are stopping Kenya. You know, Kenya is still a 90% cash economy.
Yeah.
Small payments in Kenya are still done in cash. And this needs to change. It is not safe. It is not cost effective.
When you talk about those APIs, Angela, I cannot just avoid thinking about someone, you know how we call them, the committee guys. Coming up with an API, getting into the VUMA system and being able to also now get to me in a better way. The same way they send me, oh, there's KCB loan here, you know, you've won money there. What safeguards do you have to ensure that then somebody does not just develop something piggybacking on the VUMA system to defraud others, your customers?
Here's the thing. I actually tell people that there are two reasons people get defrauded. One, they can be too trusting and give away their own information. We, as much as possible, will try to ensure that those systems are solid and secure, right? But here is the problem. We call it social engineering. When you get a phone call or an SMS and somebody tells you, nilikutumia hizo pesa nitumie, nirudishie, or you know those steps of
tuma kwa hii namba ile ingine ifanye.
Tuma kwa hii namba. Now the ID on there is actually a phone number. When KCB writes to you, it says it's KCB. When Safaricom writes to you, it says it is Safaricom. So that's what we call social engineering, where they put some really clever people or who are well spoken, and then they convince people that they're calling from the bank or from the telcos or from reputable organizations. But we have texted our customers so many times to tell them, never give out your PIN. The bank will never ask for your PIN. The bank will never ask for your personal information. So I think where the failure happens is there are people who panic easily. Someone calls you and tells you, well, if you don't give me your PIN, then we'll just have to shut down your account. And you believe this person.
Yep.
Now, the beauty of it is that with time, people are beginning to learn that these are just fraudsters, people sitting in committee or wherever they are sitting and coming up with these bots or writing up and making these fraud cases prevalent. But the more they have done it, the more educated people have gotten.
You say you've
been... I believe now it's much easier. Most people now do not trust when they see those messages or those asks.
There's more awareness. That's true.
Yes, there's a lot more awareness. I mean, we've done a lot. I mean, even the Kenya Bankers Association, KBA, has done a lot of Pinyako, Siriako communication. We've been on radio, we've run ads, we've been on telly, we've told people. So I think that piece is resolved. So fraudsters can't really, it's beginning to get better on the social engineering. We used to have to deal with a lot of them and do a lot of refunds to customers because, of course, the liability would lie with the organization if the system, it was a system failure. But if you gave away all your information, then it is very difficult for us to know whether or not you gave away your information. If the system is solid, and that was not the error, then the obligation becomes a bit difficult.
There are these outstanding, staggeringly outstanding amounts that the banking sector keeps reporting they are owed, and a good portion of this comes from fintechs. How exactly do you as bankers plan to resolve this? How do you as KCB plan to resolve this?
Sorry, outstanding amount?
Owed.
You
bad
mean
debt.
The unpaid debt?
Yeah.
Bad debt.
Deni kubwa kubwa.
Okay, so yes. So it does seem like a lot of money, but this is where the pricing comes in. So your risk-based pricing is supposed to balance between the level of risk you're taking and the amount you know is unlikely to be recovered. Now, as Kenya progresses, we learn who each individual is. That's why I say that there is that whitelist. If someone comes and talks to the bank, then the council can move them from the blacklist into the whitelist. But what's happening is that all our 30, 40 million adult Kenyans, we are going to have them on databases, and the more you misbehave, the more difficult it is to get a digital product to serve you. You have to go and have an actual conversation with a human being. And the actual conversation, you have to explain why it is you did not meet your obligation at the time. So if you were doing it merely to be, you thought that there was no consequences to it. You know, when people are young, they make bad decisions sometimes. That's why If you look.
Okay, sorry, we have lost connection with Angela Mwirigi. Let John try and get her back. This is Angela Mwirigi, the Director of Digital Financial Services at KCB, talking about fintech and financial inclusion. And yeah, the question that you're asking is, so we're seeing a lot of bad debt, especially coming down from these digital financial services. There's the issue of trust. There's the issue of how they then assess their risk, and then there's also still the issue of them trying to understand why somebody has defaulted. Because I believe not everybody goes to borrow just thinking I'm gonna borrow and then default. There must be a reason why that has led you to that default. And especially now these short-term loans where you've taken and you're supposed to have repaid within a certain duration of time, which is a short-term. If something happens and it disrupts you, then you're not able to meet that obligation. What happens?
I mean, with COVID, consider, even if you're in business, you anticipate that you will make money. It doesn't quite work out that way because the very people who you do business with probably don't have the money to do business. They would be even willing to take goods, but paying becomes a problem. And then before COVID, there was the issue of gambling. It was argued by many people that people who went into fintech borrowing was because on a daily basis they needed to gamble. So if they won a bet, then they were able to repay the loan and yet take another one. But for some people, the fintech loan was just basic survival. It's yes.
And there are many who took such kind of loans. Like, for example, imagine Mr. Mumanyi that you read about in the newspaper this morning, who was arrested. It was just opening his business. He's arrested, taken to a police station, spends the entire day in the police station.
Yes.
If this gentleman had taken a loan on a mobile platform before opening his shop and he was expected to repay within the next 24 hours, he was not
going to be able to.
So then what happens to such people? Angela is back on the line. Angela, sorry, we lost you.
Yes, apologies for that.
It's okay. See you, Wewe.
Technology.
Tech.
It is this digital thing.
That tech that I love.
It's the tech you're fighting for. Angela, before we went off, you were saying something I think is very important here. We're talking about a digital system that then doesn't require you to have face-to-face. At the same time, we've also talked about the fact that things will go wrong, whether you like it or not, by virtue of the fact that we're human beings. Circumstances will arise where, I mean, even as you went off, we said, look, it's not everybody who walks into a financial institution and takes out a facility that is saying, I'm taking out this facility with the intention of defaulting. I am deliberately going to not want to pay my loan. Things happen, right? So even with fintech that you've been embraced, where essentially it's a technology that's working with you to be able to continue these financial operations, we're still saying at the same time that a human-to-human relationship with the financial institution is necessary. So then, are we essentially saying that it's not all the way in one direction with the technology, that we are still looking as financial and banking institutions as almost a marriage between the two, that yes, you use the technology, but at the same time, you still want a relationship with the people that you are essentially serving, and still saying, even if it's the machine speaking to you, we still want you to be able to come in and talk to us.
Absolutely, which is why the branches are still up. You technically could digitize every single banking service, and there are actually digital banks that exist entirely online, and then you can talk to the chatbot. Then once the chatbot can solve your problem, you're then passed on to a human being, because it is expensive to retain a very broad staff contingent. But my point is that in Kenya, we still keep all the branches. The KCB branch network of 200 and some odd 15, I think, branches is still there. All the way to every corner of this country, there is a KCB branch. And the reason that is the case is because we know for a fact that not all our people may be able to access us digitally, but more importantly is that you can come in and talk to us. Remember, what we are trying to digitize today is transactions. Transactions is basic things. You want to use cash. You want to send money somewhere. All these basic you want to make a payment. Those basic ones, you don't need a human being to help you. You can serve yourself. And in fact, then you don't have to worry about the quality of service you received. But if you want to come and talk to someone and you want to have a more substantive conversation, because remember, we hire people, bankers tend to be people who are well educated, and we have to pay dental and optical and whatnot. They are not cheap to maintain. So we want them to have substantive conversations with people. We want them to make a difference in people's lives. So if someone does actually have that problem with the small amount they borrowed, then they come into the branch still and talk to the branch. And the branch will solve that problem for them. So that's why I mentioned that the bank does not only rely on CRB to determine whether or not someone is creditworthy. We do know there are circumstances that are beyond the pale, and therefore we must enable people to be able to come to us, and we still are able to lend them digitally, even if they're not referencing the Credit Reference Bureau anymore. So we do have options. The key to believe is that you must speak to your fellow Kenyans in the branch.
You say you've been running this, like you went full on digital financial services since 2015, right?
Yes. Well, the bank, we've been doing a lot of mobile banking. I think 2015 is when we launched KCB and that's the one that achieved scale, because now it is with 17 to 20 million Kenyans. But we started, I think 2009 is when we started mobile banking for the organization.
Yep.
So we bought a few systems from India, and then we tried to set up USSD codes and get people, and then we launched an app a few years later, tried to get people to start doing basic transactions for themselves.
Which of these digital platforms do you see getting a more bigger uptake? Well, of course, KCB and M-Pesa is one, but what other one do you see people really going forward and seeing that they can easily use?
Okay, the way I look at it is actually use cases. So if you look at the case of India and how India approached it, or even China, how they have approached it, and I love those two because there are over 1 billion people, which speaks to, it's just that it's one country as opposed to Africa, which is a continent of over 50 countries with different rules and regulations. But the point is that we have a lot to learn from the way the approach those economies have taken to going cashless. My interest and really what really I would like to see achieved in this country is small payments to move from being paper-based to being system-based. And part of that is a conversation between organizations like ours, the Kenya government, the telcos. It's going to take a lot of effort because this is not a small country, and neither is the region for that matter, but it's for us to be able to make that difference. Some of the laws would need to change, some of the taxes that we apply on some of these services would need to change. Matatu industry, public service vehicles, that should be digitized, obviously.
Why is there a push for that, Angela, if I may ask? I mean,
because
I can see the logic, but
money.
why is there a push to go away from paper, apart from the expense and maybe now the care for the environment and all these beautiful things? Because still people stuck on the tradition, but why is there that push for that, and how then really would it benefit?
And also, apart from the fact that you make money from every transaction.
Well, there's a lot of ways to monetize. We don't actually want to make money from every transaction. Like small payments, in fact, the reason they have had a hard time taking off as to get digitized is because people who are dealing in small payments, your dukas, your matatus, your parking fees, they don't want to pay. Their margins are very tight, so they don't want to pay for the transaction. But this is where an organization like ours comes in, and a platform like ours, where we are very happy to mop up the cash, and then we can monetize that through lending. We don't have to charge for the cash transfers. In fact, if you look at it, and there's been a lot of concessions that have been provided both by the telcos and the Kenya government. Like, for instance, sending below 1,000 shillings doesn't cost you anything now. Loading money into M-Pesa platform doesn't cost any money now. So we are intending actually to make it that even the movement of money, to make a payment, because for us, what we would like to enable is business. So for Buma, our strategy, our view is that from next year, what we are going to be focused on is how do we get small payments onto the platform, and how do we get small payments, because it's a very robust platform and it is able to process a lot of transactions. If we can get people to make payments on this ecosystem, then we don't have to monetize by charging for the transfers. We can monetize by lending this money back to those same businesses.
When you go digital...
So there's lots of options when you think about banks.
Yes. Please go on.
Okay, so I'm going to say, when you think about banks have a lot of options of ways to make. I can understand how come you would look at it from that it's transfer cost because of how telcos have monetized it. But a bank has very many options. We can take the money and trade it. We can lend it to the same customer base. We have a lot of ways to look at it and say, this is how we would turn this around to make it work for Kenyans and remove cash from the ecosystem.
Yes, you do. For the longest time, those who say they have studied economics will tell you that one of the adverse benefits of, if there's such a thing, of technology or of industrialization or mechanism or digitizing, as we are now saying, will ensure that technology replaces human beings. What this means is that people will be unemployed. How exactly do you plan to deal with this? Because with all this tech talk going on, for certain, all the human beings that KCB employs will not be able to fit in because technology will have taken over their jobs.
Actually, no, CP, it will not. Because now, remember, those human beings were only able to serve, around 10% of Kenya only was able to do formal banking. And now we are talking about involving a much bigger percentage, 60-80% of it should be able to access financial services. This doesn't mean that we would actually lose jobs. It means it will be democratizing economics, because it's not that there is a terminator out there that's going to be created for the AIs. And I do love sci-fi, so this is why my head would instantly go there. But no, people are not going to lose jobs. Actually, it should be easier to create jobs. What we need to do is think about how do you change the skill sets people used to employ. When I was growing up, my mother told me you should either be a teacher, an accountant, a lawyer, doctor. Well, I didn't like blood, so that was never going to happen. So there were limits to what professions you could go for. But now with technology, it's democratizing the rich. You can be living in a little village somewhere, and whatever skill it is you have, you can tell your if you're an entertainer, you can go online and you can get people to pay you. That's why it is so important for us to figure out how do we make it easier for people to collect payments, receive payments. How do we make it cheaper for people to be able to do these things? How do we make it actually almost no cost for them to be able to do these things?
Angela, are you saying KCB will not lay people off as a result of this process that we are discussing so very vigorously?
Technology has done that again. Just ensured.
Ensured that KCB could not give that information.
All right.
This is the Situation Room, the only way to start your day.